Good morning, Brenden Rendo with the Homes in Orlando team at NextHome Neighborhood Realty. And we're joined back again by Joseph. Glad you're feeling much better.
Yes.
Glad to have you back.
Absolutely. I was not happy to be sick.
And we got... The Orlando Real Estate Buzz. We come to you every Thursday at 9 o'clock to discuss the current housing market and what's going on. And it's been a fun week since since we last chatted.
Yeah.
Where do you start? Where do you start with all this news that has come out since last Thursday?
Well, I think, we kind of, everybody's hearing all this news and I laugh in our industry, like kind of in like some of the groups that I'm on, they're like, stop talking about this. We know it's bad. Consumers know its rates have gone up. But it's kind of like, well, what else are we supposed to talk about right now? This is important information.
Mm-hmm.
And really what we saw last week was, we saw the year-over-year inflation numbers come out. They were higher than expected, right?
Yep.
Put us on 41-year all-time, 41-year highs or whatnot for inflation. Where was the actual numbers? It was 6.1 or something?
8.6, yeah, 8.6.
And they were expecting it to decline a little bit. But I also think about this. It's like, is it, we knew it was going to happen, right? And then we see the market react the way that we did. And this is what kind of catches me off guard is like, hey, we know that inflation's bad. We know it's kind of bad. And we know that it's probably going to be a little bit worse before it gets better. And then we get this data, like the official data gets released. And then
everyone's
the markets are like, oh my gosh, I didn't know this was going to happen. And then everything goes sideways on like, I was looking at MBS and bonds. And what kind of was interesting is what I felt was like kind of not like normal is usually when people pull money out of stock market, right? Where do they put their money? In safe, secure assets, like, dependable, like mortgage-backed securities and treasury bonds and all. But Friday, Thursday, Friday, Monday, like what happened? Like people pulled money out of stock market and then nobody put money into those secure assets.
No.
So we kind of had something that I'm not used to seeing.
The Dixie, which is the dollar against other world currencies, mainly the euro, jumped to, I think it was 1.5, which has been an all-time high as well early in the week. And that you're exactly right. Everyone was pulling money out of the stock market because, boy, did it take a beating. We actually hit the bear market. We 20% down. We literally have hit a bear market. So they took it out in cash and they've left it in cash. Like you said, most people run to the security of bonds.
Yeah.
But it kind of makes sense because if your bonds are sitting at, 10-year T's jumped to 3.4% from 2.9 in a couple days, and inflation's at 8.6. Why would you put it in bonds?
Yeah.
So I can only lose 5% of my money per year?
Right. I'd rather have that cash, right?
I'd rather have my cash in hand and be able to, have more liquidity to jump where I want to jump.
Yep.
And that's, you're just sitting there and, I sat through Powell's meeting yesterday and a couple of interesting things popped out to me. One, they went to 0.75 basis points, which just a couple of weeks ago, Powell said, no way, not going to do it. 0.5, 0.75 is off the table. Not going to do it. Boom, 0.75. Okay. But you look at the numbers, the inflation numbers, it makes sense. He actually probably should have went 1.5 to 2.
Yeah.
Yeah.
But, I mean, reality probably should have, but
probably should have.
Soft landing.
Yeah. Like you and I were joking, right before we came on, is you got poor Jerome Powell here, piloting a plane, 747. He's got 3 engines out and his force on fire, right? And ladies and gentlemen, please, raise your seat backs to upright position, put your trays up. We're coming in for a laugh. Put your head between your knees and hold on. We're coming in and it's going to hurt a little bit.
It's going to be hot.
It's going to be hot. Exactly. And it's okay. It just amazes me how everyone's afraid to talk about it. It's like, okay, talk about it. Prepare. Get ready. Yeah, it's going to change things a little bit.
Yeah.
Okay. It's going to change things a little bit. We've been through it before. We're resilient people. Mm-hmm. We'll get through it again.
Yeah, and that's the thing is, we see what's happening, and you look at in talking purely from a real estate perspective, right? A lot of people, like, you hear the doom and gloom, and it's like, oh, this is like, it's going to be 2008, 2009 all over again. We're going to have this. And it's like, no, we're not going to have that again. Like, today we have actually, like, these are the best underwritten mortgages, right? Mm-hmm. And we didn't have that in 2008, 2009. We had kind of like really like a lot of people that shouldn't be buying homes were getting opportunities and balloons and balloon notes. And, you had the,
negative AMs,
9510s where people were getting more money than what they were paying for the property so that they could fix it up, and there was all these different things and structures. And back then we had a surplus of homes and now we have a shortage of homes. Mm-hmm. Like, this is a much, much different environment. We can look back to say, hey, how do we make sure we don't have as negative of an impact? But it's not going to be the same. It will be different. I think it'll be a little bit more. I almost feel like, it's like, I feel like this will be short, comparatively speaking. If we, I fully expect, we're going to hit negative GDP for a second quarter. The term recession is going to be, it's going to happen. But I feel like it's kind of like anywhere, all the talk and all the hype, everything happens before it actually happens.
It happens. Yep. Yeah. Yeah. I mean, the biggest conversation, the number one question yesterday was on unemployment.
Yeah.
It's like, oh, how is that going to affect unemployment? How? Because I think we're sitting at like 3.6 right now.
Yeah.
And, Powell's saying, well, we're probably going to jump to 4.1, 4.2. That quote is still full employment in the country. Mm-hmm. I mean, we are starting to see, in the real estate industries, announcements of different layoffs, Redfin, Compass, laying people off. Again, you got some mortgage companies.
A lot of mortgage companies and it's
tightening up.
It's going to happen. Last year, you had $4.1 trillion in mortgages written. Like, that was that was like 60% higher than the next best year. That was just a year earlier. Like, it was like, it's going to happen. Like, so many people flocked to this industry and so much manpower was needed because of the volume. And now the volume's not there. It's going to contract. You're
at the top of the roller coaster and you're just going to come down to where you started.
Yeah.
And it's a nice even pace.
Yep.
So, and it's just one of those, it's just, hey, it is what it is. Mm-hmm. Get up in the morning, continue to do your stuff.
Yeah.
I've seen lately, in the past couple of weeks, I've got a company I work with for seller leads, and that's exploded. Everyone's getting nervous that, hey, they
missed the curve. They missed
the
most dollar ever.
Yeah, they missed the boat.
Yeah.
But okay, so you don't get a 45% return from owning the house for 2 years. You end up with a 40% return.
Yeah.
Oh,
cry me a river.
Cry me a river.
Right, like, oh, this is so tragic.
Yeah. And I mean, I was having a discussion with a couple agents out of LA where they're actually starting to see some price reductions, and stuff. But it just makes sense because I think you and I were talking last night, at 3%, we had a ocean full of people buying houses.
Yeah.
At 4%, we're down to, a small Mediterranean Sea, At 5, we got a nice lake. At 6, hey, we've got a pond. There's still people buying. Mm-hmm.
Yep.
And I mean, the nice thing is it's giving us more of a balanced buyer seller type of situation. Mm-hmm. I mean, if we look at it here, I pulled up
I mean,
Or
if you're a seller, you don't want balance, but
no,
but for a
but
healthy economy, we want for a healthy marketplace, we want balance.
yeah.
Like,
But if you look at it, the you kind of need you can't be this way all the time, you know.
Yeah.
But if you're holding steady on the pricing, that's all right. To me, that's all right.
Yep.
You know, this is what's nice to see. You know, these are Aura's numbers that just came out for May out yesterday, and we had 4,822 new listings come on the market. That's an 11% increase.
Okay,
over last year,
right?
Year over year. Okay, and you see we're kind of hitting, like, you know, last July we started to finally see some relief on the inventory, and we're going up and we're hitting those levels again to where we were last July, where you could start to breathe a little bit with your buyers. You know, you didn't feel quite as rushed as you did
You had
before.
a little bit of an option.
Yeah,
you could actually see the property. You didn't have to you know,
didn't have to have your laptop right there, you know, with everything.
Yeah.
You know?
Let's sign that DocuSign as we're looking at the property.
Exactly. So our month of inventory, we're jumping up a little bit on that. We're almost to a full month of inventory. Okay. Which is good. Again, letting it, you know, giving us a little bit more opportunities. The days on market is still staying low. That's one thing that's interesting, is the days on market are still staying low. It's averaging 21 days right now with the numbers.
So it's definitely still really good.
Yeah. Then you look at our current inventory level. We're 36% higher than we were last year. That's huge. That's again good. You know, it's still not quite where it needs to be. We're still about half of where it needs to be. This back in May of 20, the 7,200. That's, if we get back up to 5,000, you know, 5,500, I think we're really, really in the balanced kind of market. But still, you're seeing things, you know, stay on the market, you know, through a weekend. You know, talked to a couple of friends who had, you know, one had a house in Oviedo. It's like, oh my God, it didn't sell over the weekend. You know, called me on Tuesday. Oh, we got a contract. I'm like, okay.
Right? Like, oh, it's there. It's still moving, but people are being, you know, the one thing that I will say is, you know, with a lot of this balancing, like being on the mortgage side, right? Like, I know as a realtor, like if you got a listing, you want it to be gone like tomorrow type thing. But being on the real estate, you know, on the mortgage side with buyers and such, it's good to see buyers be able to breathe and go, okay, is this the property for me? Because I think there's a lot of buyers that kind of they felt the pressure of, like, they got caught in the pressure and the emotion of, I got to win this. That, you know, I was dealing with a lot of clients that, you know, 3, 4, 5 months after they closed, I'd be checking in on them and they'd be upset at the.
There was a lot of buyer remorse.
A lot of remorse. They purchased and then they were like, man, it really wasn't in the location I wanted. There wasn't the home that I wanted. I really needed more square footage, but I just settled. I needed to get and there are a lot of, you know, buyer remorse after the fact. So it's kind of cool to see a little bit of a settle down to where buyers can feel comfortable to be like, okay, let me breathe for just a minute and make sure that this is the home that I want.
Exactly.
You know, because I think that's, you know, that's really important.
Yeah. The other area where you're seeing it is in the builder inventory. All of a sudden, you know, 5 emails a day from builders.
Builders love their realtors all of a sudden again.
Yeah. All of a sudden, you know, D.R. Horton has like 900 homes in inventory in the Central Florida area.
Isn't that amazing how that happens?
Yeah, and it's like great. It's just like, okay, now let's go beat them up. You know, they're only giving a $5,000 incentive, you know, for closing costs. Well, they're not necessarily going to knock down the price of the house, but hey, you know what? Why don't you give me an extra 10? You know, and we'll consider the house.
Yeah.
You know, because the worst thing for a builder is holding inventory. They do not want to hold inventory.
Yep, especially right now as we enter that end of Q2.
And with rates going up, when you're at this peak in price on your builds, you want to get rid of that inventory as quick as you can. So I think, through the summer, we're going to start seeing some nice incentives from a lot of these builders to, hey, come on in, we'll pay all your closing costs, or we're going to, they'll do the old, oh, I'll buy down your rate type situation, which that one's always fun for you, isn't it?
Yeah, I mean, I enjoy builders and their skirting of RESPA.
This is the most interesting one that out of all the information I pulled. And this is the average mortgage paid by buyers in Central Florida. It is up 77% from last year. For
the interest rate.
Yes, yeah. So as you look at it, it's 2.97 back in May, and we're 5.28. So interest rates have gone up nearly 78%.
And the key here is this is closings in May, which means these were locks that happen in March and April, some even earlier than that. So like we're gonna see this number continue to climb, especially with we get into July. That number, I wouldn't be surprised if in July that number is sitting closer to 6.
Yeah. But this is where we were talking. Our buyer pool has shrunk. We've still got them. People are always going to need homes. What do you need? Homes, food, 2 basics of life. So the buyer pool shrunk a little bit. So what does that mean on our pricing? Hold on a second. What we're seeing right here, which is the median sales price, is just staying flat.
Yep. Look at that. Month over month.
It's
like, I mean, that is consistency right there.
Yep. We've peaked. We've really peaked. Which that's fine. People shouldn't have a problem with that, because if you bought, my gosh, like I did in 2018, I'm up roughly 43%.
Yeah.
On the value of my home. I can live with that for 4 years, 10% a year average. Yeah, I can live with that.
Yeah. You're still beating inflation.
Yeah, still crushing. Yeah, actually, still beating inflation. So, but this is we've really leveled out, which is good. I don't think we're going to see it dip anytime. Really anytime soon. I think we're going to hold steady. Yeah. At this number, you might see a small fluctuation, but I don't think we're going to see that like 2008 all of a sudden, boom.
No,
prices just jumped, just disintegrated.
Exactly. I mean, I don't think we're going to see that either. I think we're going to hold steady. And I think we'll probably hold steady. There's a good shot that we hold steady for the latter part of this year. And then before we start seeing an increase, it'll start going up again at some point. But I think it's going to be more gradual the next time it goes up. And it's going to be more within historic norms, right? Like we've been massively outpacing historic norms.
Yep.
So I think we're going to get more into that historic level of growth. And what does that look like is, I think it might be 20, we may see it be flat this year, the remainder of the year. And then 2023, we start seeing it go up again. But until we have stabilization on the rates and inflation and a lot of these other pieces, we're going to see these values start to kind of hold firm.
Yeah. This was one actually I wanted to show you, because we've always talked about the average. Hold on a second. Let me just pop this up a little bit. Monthly inventory. Okay, how many months of supply is a balanced market? Yeah. Well, for Orange County, I just wanted to look at Orange County, the 5-year average. The 5-year average for Orange County is roughly 1.8 months. So we've never, on average, over the past 5 years, we've never really carried, that 3 or 4 months worth of inventory.
Yeah.
So, I mean, when we hit, really like a 1.2 or 1.3, we're really coming back into balance.
Hmm.
So at a little less than a month supply, we're really not that far off
Gotcha.
of where a balanced market is
Hmm.
for Orange and Seminole counties. Very, very similar to this number. Because
Gotcha.
I was just thinking that, we're 6 months supply, 6 months supply is a balanced market. Like, not in our area, not
No, yeah.
really, not for the past 5 years.
And we have a large number of people moving into the area, and so
Hmm.
much, and that's probably what dictates it. It is one of the most sought after regions,
Yep.
in the nation. And we're continuing to grow, we're continuing to expand, and we're continuing to see new industry kind of pop up
Yeah.
and open
And
large
that's
headquarters and so forth. So we're going to
yeah.
continue to see that trend.
I mean, that's what I think the Census Bureau, says we're going to grow. Uh, was it 200,000 or 300,000 people over the next 10 years?
Hmm.
So again, one place where we're kind of unique in Central Florida is the growth.
Hmm.
Is where other places may contract, we're pulling a
Yeah.
lot of those people in, just like you said. So for us, I think, yeah, we may be, at over a wheel when
Yeah.
the plane's coming in. So we got a little bit more of a shock absorber, So I think for us, it's going to be a little bit softer
Yep.
than we may see in other parts of the country.
Yep, I agree. I definitely agree with that. And, it's going to be, I think we're going to be all right. I think the nation's going to be okay. It's, I know that media has a kind of doom and gloom nature to them, but that's
Hmm.
exactly what they're there to do, is to
Yep.
kind of create panic, because that creates viewers. Like, let's be real. Like, they don't make money if people don't watch, and you don't watch if things are boring,
Yeah. Yep.
so
Clickbait.
they got to
you
make it
know.
sound crazy. So hopefully, for those that tuned in or watched, or talked to Brenden or myself, like, maybe we can at least you feel a little bit like, hey, it's okay.
Yeah.
Like, it's all going to be okay.
It's all going to be good. So, anyway, thank you, everyone. We always appreciate you joining us here on these Thursday mornings. Joe, thanks again. You're not going to be here next week. You're going to be in El Salvador on a mission.
I will be in. I may. I we'll play it by ear. I
Okay.
might be able to. I might be able to tune in. I think I'm traveling. I might get back right at the tail end, like late Wednesday night, like aka
Okay.
Thursday morning. So if I'm up to it, maybe I'm on. Who knows? We'll find out. But yeah, I'll be in El Salvador this week. I fly out later, early morning tonight or tomorrow.
Wonderful. Wonderful. Have a great time. Be safe. Have a wonderful Father's Day
You as
this
well.
weekend. All right. Take care, everyone. Okay. Bye bye.